So if you buy and sell stocks or investments, you probably have capital gains and losses. So what are the taxation rules for them? In this video, we're going to talk about the short-term capital gains and losses, and then the long-term capital gains and losses. And then we're going to talk about their tax rates as well. So I hope you enjoy. Let's jump in. So first, we need to know that we have short-term capital gains and losses and long-term capital gains and losses. So when I talked about the rates for 0, 15, 20%, that only applies to long-term capital assets. So then a short-term capital asset is any capital asset that you hold for fewer than 12 months. And this is not going to be taxed at the 0, 15, and 20%. This is taxed at the individual's highest marginal tax rate. So you definitely want to have long-term capital assets. So what you're going to do is you're going to net together your short-term gains and losses, and then you're going to net together your long-term gains and losses, and then you net together the short-term activity and the long-term activity, and then the net amount is what you have. So if you have more of a short-term loss than a long-term loss, then you're going to have a short-term loss for the year. And if you have more of a long-term gain, you would have a long-term gain for the year. And then we need to know that an individual is allowed to deduct up to $3,000 of capital losses each year. And then any amount that they're not allowed to deduct that year in excess of the $3,000, they carry forward indefinitely. So now let's talk about the rules for a wash sale. So this involves buying and selling stocks. So let's say that you sell stocks for a loss, but then you buy back the stocks within 30 days. So whenever you buy back the stock that you had a loss on within 30 days, the IRS does not allow you to record that loss. So these are the rules for a wash sale. So now let's take a look at a practice question.